Bitcoin just broke above 80K and wiped out short sellers, but then it quickly dropped back to 79K and started trapping the late longs. So, this is not a normal pullback. This looks more like a leveraged slaughterhouse. First, look at the background. When Bitcoin broke above 80K, the market had already seen massive short liquidations. Many shorts thought 80K would reject the price, but once Bitcoin broke through that level, their stop losses and liquidations started triggering one after another. That is why price sometimes accelerates upwards so violently. It is not always real buying. Sometimes it is forced buying from shorts being squeezed out. But the real danger comes after that. Once price breaks above 80K, a lot of longs start chasing the move. They see the breakout and think the bull market is back, so they enter with high leverage. Then Bitcoin quickly falls back to 79K, and the longs who just chased the move become the next liquidation fuel. Why does 80K matter so much? Because 80K is not just a price, it is a psychological level shorts place stop losses. Their longs chase after the breakout, and sideline traders use it as a signal to decide direction. So when price gets close to 80K, leverage becomes extremely crowded above the level. There are short stop losses. Below the level, there are long liquidation zones, and in the middle you have Bitcoin at 80K, acting like a meat grinder. That is why the most important question is not simply bullish or bearish. The real question is whose leverage is more fragile. Crowded shorts get squeezed first. Late longs get washed out next. That is why you see price pump first and then dump quickly. On the surface, it looks like volatility, but underneath it is the market clearing leverage. If you want to judge whether this is a healthy breakout, do not only ask whether Bitcoin is above 80K. You need to check at least 3 things. First is spot demand, really following. Second are large capital inflows, continuing. Third are funding rates and open interest overheated. If the move is mainly driven by liquidations, then the faster it pumps, the higher the risk becomes. Because liquidation-driven rallies can be powerful, but they are not always stable. They can push price up very fast. Then once late longs enter the market, can reverse and flush them out. So 80K itself is not confirmation that the bull market has restarted. It is more like a stress test. If Bitcoin can stay strong after clearing leverage near 80K, then maybe there is real demand behind the move. But if it only pumps because shorts get liquidated and then quickly falls back to 79K, then it looks more like a leverage trap. That is why I do not only watch price. I want to know which wallets are adding positions, which wallets are reducing risk, who is chasing with high leverage, and who is getting close to liquidation. This is where wallet analysis becomes useful. The point is not to blindly copy whales. The point is to see who is actually taking risk in the market. Because copying a direction does not mean you copied their entry price, position size, margin, exit plan, or risk tolerance. So what do you think, is Bitcoin 80K a real breakout or a leverage trap? Comment A for breakout or B for trap.